Hello, ladies and gentlemen. Good day and welcome to the show on this Friday, the 25th of June, 2021. You know, it's been awfully hot for June. I don't ever remember a June this hot before, with this much heat and this much heat waves. It's really strange, because it stayed cold. I never remember it staying cold. Just like, I think it was just like a month ago, it was snow on the ground here. And then we've had 2 or 3 heat waves. The temperature can change so quick right now. Okay, I spotted something today on Zero Hedge. Let's get in there and let's take a look. Let's open up the charts right here. I spotted these stories on Zero Hedge. Where is it? Give me a second, guys. Russia warns Britain it will bomb its ships next time. It says we can appeal to common sense, demand respect for international law, and if that doesn't work, we can bomb. What's all this about? Where'd this come from? Now I look down here a little ways, and I seen this. It says the United Kingdom or Britain would send warships through Crimean waters again. The minister says we never accepted the annexation of Crimea. Those were Ukrainian territorial waters. Oh boy. So what do we got now? What are we talking about now? Another hot spot? As far as I can see, there's like 4 hot spots in the world right now. This is a new one just added to it. There was 3 before I was watching. I was watching the South China Sea, the area around Taiwan. No, make that 5. The whole Middle East is a hot spot. Let's just put it that way. So there's hot spots in the world right now. Why add more to the list? It's about time we did some de-escalation of all these hot spots. It'd be a good idea, I think, anyway, personally. Because the world has. It's not like it was back in the 1930s and 1920s, back before we had nuclear fission. Nuclear fission was invented. In other words, they split the atom. Now the world's a different place. And so these politicians and everything, they need to think in terms of de-escalation, not escalation. That would be a good idea, de-escalation of hotspots. Anyway, let's get in there and take a look now at the silver price. The silver price is up 25 cents at 26.17 today. Now let's take a look at gold and see what gold's doing. Gold today is at $17.86. It's up $12.20. Looks like gold's on a rise right now, but it did this before at about the same time, and then it dropped back again. You can see in the blue line, it's done that 2 days in a row. Done exactly the same thing. It rises around now, and then it drops off later in the day. Let's take a look now at cryptocurrencies. Cryptocurrencies is at 1,319 billions with a Bitcoin price of 32,989 today. See, it doesn't seem like Bitcoin wants to go below 30,000. And the things that have been causing it to go down, are starting to run out of steam now. We saw a tremendous. Anybody out there says cryptos are in a bubble? The bubble popped. Bitcoin was $64,000. Now it's $33,000. Nearly half the price. That's a bubble popping. When you got something that goes down 50% in price, the bubble's popped. I don't care what it is. I don't care if it's cryptocurrency or anything. When you get a 50% reduction in price, your bubble's popped. So cryptocurrency, the bubbles has popped. It's not in a bubble right now, really. Take a look at gold and silver. They're not in a bubble. What is in a bubble? The stock market's in a bubble. Real estate market's in a bubble. Those are 2 of the biggest bubbles out there. A bond market is in a bubble. Tremendous bubble. Let's take a look at the Dow now. See what it's doing. 34,405. Is this the time when the Dow is getting ready to set new highs and finally get away from this territory that it's been in for the last 3 months at around 34,000? Could we be getting ready to go up to about 36,000? That's just a question, you know. If we do get that kind of a rally, and I'll tell you something, I think that sentiment is starting to change toward gold and silver really big time now. I think in the next few months, I think we're going to see it start to heat up toward the end of the year, you know. It's been kind of static lately. It's been kind of just running in the same slot, you know, and as far as price is concerned for gold and silver, it's kind of been in the doldrums, you know. I think it's gonna catch a little bit of headwind, you know, coming up pretty soon. Let's take a look now at the MOVE index. Oh, we forgot oil. Crude oil 73.45. It's up 15 cents on the day. Now let's take a look at the MOVE index. MOVE index today is 54.83. You can see it made a turn in the markets. It was a descending chart. Now it's going up in price. I mean, going up slowly. It's what do they call it? Ascending, or not descending, ascending, I think they call it. Anyway, but the change came about right here, and that's when it started to change direction. Now it's moving up. The MOVE index. Let's take a look at bonds and rates. Bonds yields are climbing. I think that they're going to climb. The U.S. 10-year is going to climb toward 2%, and it's going to take it all the way till the end of this year to get there. But I think that the U.S. 10-year right now, which is at 1.5% or 1.51%, say 1.5%, is going to slowly creep toward 2%. This is your biggest indicator out there of your crash, because in my estimation, we're not going to get our crash until that 10-year goes over 2%. And when it starts to creep up toward 2.25, maybe heading toward 2.5%, that's when we're going to get our crash. We've got to watch that 10-year. The 10-year is the big giveaway for this. And as inflation starts to pour in, the tendency is going to be for these yields to start to creep up because of inflation. And I don't think the Fed's going to really do anything. All these yields are going to, especially on the long end, are going to creep up, and at a certain point, they're going to start to bring that down the markets. You know, I'll tell you, it's going to take a little while for that to happen. And that's why I've been saying that I'm expecting the market crash really to occur somewhere between January and the middle of the year. You know. Long in there, January, February, March, April, May, June, long in those months, one of those months, I'm expecting the market crash. And, you know, it might not start real fast. It might not be a sudden crash sort of thing. It might be kind of like this little crash that we just been through, you know, where you get a number of days that add together, where the market goes down, 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 and then it starts to accelerate. I think that's probably going to how it's going to run out, you know. But it ain't going to stop. The Fed and all of these guys who watch the markets are going to be saying, hey, you know, this'll turn around like it did this time. Remember how this one turned around? No, this is not going to turn around. And when you're going to see that is you're going to see that when your U.S. 10-year is over 2%, somewhere over 2% on the U.S. 10-year. That's when you're going to see that it ain't going to turn around. It's going to continue to fall. It's going to gain momentum. When they see it past 20% correction, which is more than just a correction, it's almost the beginnings of a crash, then they're going to have to step in, probably somewhere between 20 and 30%. When the market's down between 20 and 30%, the Fed's going to have to step in and do something. Now, I'm anticipating what they're going to do is yield curve control, and possibly some other forms of stimulus. Who knows? I mean, they're very inventive. The Federal Reserve is very inventive. They can come up with something new that you never heard of before. New ways of getting that money. It might be the time that they come out and release their digital currency. Who knows? Maybe it's going to be the time that they start some big programs. You know, they'll come up with something, but they'll turn the market back around again. Probably between 20 and 30% down. Just like they did at the start of the pandemic. Do you remember? We had a big market fall then. And all of a sudden they come out with $2.2 trillion stimulus. What happened? They turned the market around. They'll do the same thing again. But this time it's different when they turn the market around. This time we're not going to see, we're going to see it's going to be the beginnings of it's going to be what triggers the hyperinflation when they do it this time. This is going to be what's proverbially known as the last straw. It's coming, guys. Wait for it. Sometime in the first 2 quarters of next year. It's going to be what's called the proverbial last straw when they do that. Then they're going to have to do it to turn the markets around. Okay, so where were we here? We are going to take a look at the US dollar index. 91.59 today, and it's dropping down a little bit. Starting to lose some steam. Thank you guys for listening to the show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.